Hey everyone, this is Deep Dive Stock Earnings. Today we're taking a deep look at Zscaler's latest results for fiscal Q1 2026. This quarter was one of those rare moments where a company delivers strong growth, strong scale, and strong profitability all at the same time, and on top of that, multiple business pillars beat expectations way ahead of schedule. If you've been following SaaS or cybersecurity for a while, you know how hard it is to hit all of those at once. So let's go straight into why this quarter stands out. Let's start with the hard numbers. Revenue for the quarter came in at $788.1 million, up 26% year over year and nicely above expectations. ARR also grew 26% and is now over $3.2 billion, the more forward-looking indicator. Deferred revenue grew even faster, up 32% year over year to about $2.35 billion. And what that tells you is simple: bigger deals, longer commitments, stickier customers. It's the kind of momentum that shows up before revenue even hits the income statement. Profitability was equally strong. Non-GAAP net income hit $159.5 million, up from $124 million last year. But the number that really stood out this quarter is what management calls their Rule of 78. Most SaaS companies look at the Rule of 40: revenue growth plus free cash flow margin. If you're above 40, you're considered healthy. But Zscaler this quarter delivered 26% revenue growth, plus a 52% free cash flow margin totaling 78, nearly double the industry benchmark. And what that really shows is extreme operating leverage. When a business reaches this level of scale, adding new customers or turning on new modules becomes almost pure profit. And keep in mind, Zscaler is now running at over $3 billion of ARR. At that size, almost every SaaS company slows down into the teens. Zscaler holding growth above 25% at this scale puts them in a very rare category. The balance sheet is strong to over $3.3 billion in cash and investments, even after completing the acquisitions this quarter. Now let's talk about what management calls their three major growth pillars this quarter: AI security, zero trust everywhere, and data security everywhere. These three pillars basically show you where enterprise security budgets are shifting. We'll go one by one, starting with the fastest growing one. First, AI security. This segment is absolutely exploding. Management originally expected AI security ARR to reach $400 million for the full fiscal year, but they hit that goal 3 quarters early. The new target is now over $500 million by the end of FY26. So why is demand growing this fast? The CEO put it very clearly: as companies adopt AI agents and large language models, attackers are using AI to automate their attacks. The more AI you use, the more the vulnerability gets amplified. If your core security is weak, AI becomes a massive attack surface. Zscaler now processes over 90 billion AI and machine learning transactions every single month, and that scale basically turns them into a security observation tower for enterprise AI. The second pillar is zero trust everywhere. This is their bundled platform approach, and it's growing way ahead of expectations. Their original target was 390 enterprise customers by year end. They already passed 450 3 quarters early. There's a great example here: a major healthcare company moving its entire on-prem ERP onto SAP Rise. Traditionally, that kind of migration requires tons of virtual firewalls, load balancers, routing complexity, expensive, low, and a nightmare to maintain. Zscaler's gateway architecture cut that deployment down to about 10 minutes. That's not an exaggeration. And when enterprises feel the difference during cloud migration, the adoption curve gets very steep. Management even compared the SAP Rise migration wave to the big shift from Microsoft Exchange to Office 365 a decade ago, meaning they see it as a multi-year tailwind for the business. The third pillar is data security everywhere. Traditionally, companies needed 5 or more different vendors to handle DLP, DSPM, classification, and other data controls. Zscaler puts all of this into a single integrated platform. Customers manage everything from one console with one set of policies. This quarter, multiple large customers purchased several modules at once. One healthcare customer bought 5 modules covering over 23,000 employees. The core reason is simple: integrated platform, lower cost, faster deployment. And the engine that makes these 3 pillars scale is the ZLEX program. This is a long-term consumption model where customers commit to a large multi-year contract upfront and can turn on new modules whenever they need them without having to run a whole new procurement cycle for large enterprises. That's a huge convenience. And for Zscaler, it locks in long-term revenue. This quarter, ZLEX bookings grew extremely fast, with some customers adding multiple modules all at once. One aerospace company added 9 modules in one shot and increased its annual spend by over 40%. Now let's talk about the acquisitions SPLX and Red Canary. SPLX strengthens AI security posture management, including detecting all LLMs used across the organization and enabling AI red teaming, basically stress testing AI models to see whether they hallucinate or leak sensitive data. Red Canary brings AI-powered detection and response into the security operations workflow. Management also emphasized that the contribution from these acquisitions this quarter was very small, meaning the strong results came from the core business itself. Next, let's look at the outlook for Q2. Revenue is expected to land between $797 and $799 million, about 23% growth year over year. For the full fiscal year, ARR is projected between $3.698 and $3.718 billion. Full-year revenue is expected to land between $3.282 and $3.301 billion. Free cash flow will normalize for the full year. Management expects about 26% to 26.5%. Still extremely strong for a company growing over 20%. Before we wrap up, we need to highlight one major long-term tailwind: the migration from on-prem ERP systems to cloud-based SAP Rise. This isn't a small trend, it's a structural shift, and traditional security architectures simply don't work for this new environment. That means companies are forced to upgrade their security stack as they move. Over the next 2 to 3 years, this could be one of Zscaler's biggest growth drivers, right alongside AI security. So overall, this was a very strong quarter. High growth, large scale, strong cash flow, multiple business lines beating expectations, and continued confidence in the long-term outlook. More importantly, we're watching a structural shift in enterprise security, spending from multi-vendor fragmentation to integrated platforms, from perimeter security to full zero trust, from manual workflows to AI-driven automation. Zscaler sits right at the center of all 3 shifts. If you see it differently, let me know in the comments. I'm Deep Dive Stock Earnings. I'll see you in the next video.